Sony Group Corporation, the Japanese entertainment and electronics conglomerate, with more than half its operating income now generated by software-driven content, gaming, music, and film.
FY2026 full-year sales 12.48 trillion yen, record operating income 1.45 trillion yen, 500 billion yen buyback authorized.
Sony was founded in 1946 by Masaru Ibuka and Akio Morita, starting with a tape recorder before becoming the global brand behind the Walkman, Trinitron, and PlayStation.
Sony transformed across decades. PlayStation launched 1994, Columbia Records and TriStar Pictures acquired, and a deliberate pivot from hardware to content as electronics margins compressed.
Hiroki Totoki became president and CEO in April 2025, inheriting a Sony where gaming, music, and film generate more operating income than all physical hardware combined.
Game and network services, PlayStation Software and Network, is the largest profit segment. Sony Music Entertainment and Publishing is second, with deep catalog royalty streams.
Pictures contributes Sony Pictures and TV production. Imaging and sensing solutions, image sensors for smartphones, supplies Apple and other OEMs. Financial services rounds out the mix.
FY2026 sales 12.48 trillion yen, with record operating income 1.45 trillion. ADR EPS 9 cents versus 14-cent estimate. The miss from yen strength, not operations.
Sony announced a 500 billion yen buyback, the largest in company history. FY 2027 guidance targets operating income 1.6 trillion yen despite projected FX headwinds.
In gaming, Sony competes with Microsoft Xbox globally and Nintendo in Japan. PlayStation remains the leading console platform by installed base. In music, Sony is one of 3 major global labels.
In image sensors, Sony Semiconductor holds approximately 50% of the global smartphone camera sensor market, supplying Apple, Samsung, and Chinese OEMs with stacked CMOS sensors.
Sony signed a non-binding MOU with TSMC for a joint venture in next-generation image sensors for automotive and robotics, a preliminary agreement signaling intent to move up the industrial sensing value chain.
Sony operates globally from Tokyo, with PlayStation Network serving over 115 million monthly active users and Sony Music representing artists across more than 60 countries.
The semiconductor business is concentrated in Japan. Kumamoto and Nagasaki fabs supply most of Sony's image sensor output. The TSMC MOU, if executed, would be Sony's largest capital partnership in decades.
Hiroki Totoki has served as president and CEO of Sony Group since April 2025, previously CFO and deputy president, where he led the portfolio shift, elevating content and software margins above hardware.
Under Totoki, Sony recorded its highest-ever operating income and announced the largest buyback in company history, expanding entertainment and semiconductor segments through FX headwinds.
Sony Group Corporation, the Japanese electronics and entertainment conglomerate, 12.48 trillion yen in FY 2026 sales, record 1.45 trillion yen operating income, 500 billion yen buyback, and a TSMC joint venture MOU for automotive image sensors.
FY 2026 ADR EPS 9 cents versus 14 cents estimate. FX and one-time charges, not operational weakness. Record operating income, record buyback. FY 27 guidance targeting another operating income record. Sony's platform diversification across gaming, music, film, and semiconductors is performing.
Sony Group reported full-year FY 2026 revenue of $83.2 billion, up 3.7%, with record operating income of $9.65 billion. The headline shows a $2.18 billion net loss. Ignore it. That loss is entirely non-cash accounting from spinning off Sony Financial Group. Underneath, Sony's operations just set an all-time record. This is Charged Alpha.
And I'm Lana. Sony Group Corporation is a Japanese conglomerate headquartered in Tokyo with approximately 113,000 employees. The company spans 5 segments: game and network services anchored by PlayStation, music covering recorded music and publishing, pictures for film and television, imaging and sensing solutions producing the image sensors inside most smartphones, and electronics for consumer and professional devices. Market cap is approximately $85 billion.
Hiroki Totoki became Group CEO on April 1, 2025 after serving as Sony's CFO. Kenichiro Yoshida, who rebuilt Sony from a struggling hardware maker into a content and technology powerhouse over 6 years, moved to chairman. Totoki inherits a company generating nearly $10 billion in annual operating income from a diversified entertainment and sensor portfolio.
Full-year revenue reached 12,479.6 billion yen, $83.2 billion. That beat consensus and grew 3.7% year-over-year. Operating income hit 1,447.5 billion yen, $9.65 billion, a record, up 13.4%. Both metrics beat estimates.
The headline net loss of 326.9 billion yen, $2.18 billion, is accounting, not operations. Sony's October 2025 spin-off of Sony Financial Group required reclassifying 1.36 trillion yen of equity into discontinued operations. No cash left the company. The ADR EPS of 9 cents versus the 14-cent estimate missed entirely because of this reclassification.
Game and network services, revenue of 4,685.7 billion yen, flat year-over-year, with operating income of 463.3 billion yen, up 12%. PlayStation 5 cumulative sales hit 93 million units. The segment absorbed a 120.1 billion yen Bungie impairment tied to the marathon game launch delay.
Music was the standout. 2,120.1 billion yen in revenue, up 15%, with operating income of 446.9 billion yen, up 25%, and a segment record. Streaming royalties from Spotify and Apple Music drove the outperformance. Sony Music holds the world's second-largest recorded music catalog.
Imaging and Sensing Solutions posted 2,151.5 billion yen in revenue, up 19.6%, with operating income of 357.3 billion yen, up 36.8%. Multi-camera smartphone stacks are the growth engine. Pictures came in flat, operating income down 10.6% on the Pixamondo VFX studio shutdown.
The board approved a 500 billion yen buyback, $3.33 billion, roughly 3.9% of market cap. FY 2027 guidance targets operating income of 1,600 billion yen, a record, up 10.5%, on sales of 12,300 billion yen. Net income guidance of 1,160 billion yen reflects the clean entity after financial services is removed.
Hiroki Totoki joined Sony in 1994 and spent over a decade as CFO rebuilding the balance sheet. As CEO, his priorities are PlayStation service growth, image sensor capacity expansion, and the FY 2027 operating income record. His first visible test is Marathon, Bungie's comeback live service game, which must prove the $22 billion acquisition was not a costly misfire.
Analyst Consensus was constructive heading into results. The core debate was whether the financial services spin-off accounting would be correctly parsed by Western investors, or whether the ADR EPS miss would trigger a reflexive sell-off. The sell-off happened. Most analysts maintained or upgraded positions after walking through the discontinued operations math.
The sum of parts argument drives most buy recommendations. PlayStation, with 114 million monthly active users, would carry a premium multiple as a standalone subscription business. Sony Music, at record operating income, is a high-margin recurring revenue asset. Image sensors at over 50% smartphone market share are infrastructure-grade revenue. Combined under one entity at roughly 8 to 9 times operating income, Sony trades at a significant discount to blended intrinsic value.
On music, analysts highlighted the structural streaming tailwind. As platforms add paying subscribers, Sony Music's per-stream royalties compound with minimal incremental cost. The 25% operating income growth outpaced what even the most bullish analysts modeled, suggesting Sony Music is gaining catalog share relative to Universal Music in the premium tier of streaming economics.
The Bungie impairment drew the sharpest analyst commentary. The 120 billion yen write-down validates what many feared after Concord was canceled 2 weeks post-launch. Sony's live service gaming strategy has been expensive and inconsistent. Bulls argue Marathon clears the deck. Bears argue Marathon is another high-risk bet in a genre dominated by Fortnite and Warzone.
The 500 billion yen buyback received uniformly positive commentary. For a Japanese conglomerate, this level of capital return is exceptional. Corporate governance reform pressure is clearly being actioned. Analysts read the buyback authorization as the board signaling that current ADR prices materially undervalue the continuing operations earnings power now visible without the financial services drag.
The bull case is sum of parts re-rating. PlayStation Network, Sony Music at record profit, and Image Sensors at over 50% market share are three independently defensible franchises. Bundled into one conglomerate at 8 to 9 times operating income, the implied discount is large. Removing financial services simplifies the story for global investors who previously discounted Sony for complexity.
Image sensors are the under-discussed compounding asset. Sony controls over 50% of global mobile image sensor supply. As smartphones migrate from 3 to 5 camera lenses per device and AI photography raises resolution requirements, Sony's revenue per device grows structurally. The 19.6% revenue growth and 36.8% operating income growth in INSS suggest this segment is still expanding margins.
FY 2027 guidance of 1,600 billion yen in operating income, approximately $10.67 billion, at the same $85 billion market cap, implies roughly 8 times forward operating income. If Totoki delivers that target, the valuation is cheap for a portfolio with PlayStation, the world's second-largest music catalog, and the dominant smartphone sensor business.
The bear case begins with PlayStation. PS5 cumulative sales of 93 million are tracking below the PS4 lifecycle pace at the equivalent point. Console hardware is cyclical. The PS6 generation requires billions in R&D investment with no guarantee of recapturing the installed base. A disappointing next console cycle would compress game and network services operating income materially.
Bungie is the capital allocation concern. Sony paid approximately $2.2 billion for Bungie in 2022 and took 120 billion yen impairment on Marathon delays. Live service gaming is brutally competitive. A second major PlayStation Live service failure after Concord would raise real questions about Sony's ability to compete with Microsoft Game Pass.
Currency risk is structural. Sony reports in yen but earns global revenue. A strengthening yen, persistent as the Bank of Japan normalizes rates, compresses dollar-translated results. The $83.2 billion revenue figure assumes 150 yen per dollar. At 120 yen, that same yen operating income shrinks 20% in dollar terms.
Electronics has no clear catalyst. Revenue down 6% and operating income down 17% reflects lower-cost Asian competition at the commodity end and Apple ecosystem lock-in at the premium end. Consumer television and audio hardware face secular margin pressure with no reversal visible near-term.
On gaming, Microsoft through Xbox and Activision Blizzard is the direct competitor. Microsoft's Game Pass subscription model at 30-plus million subscribers challenges PlayStation's traditional game sale revenue model. Nintendo, with the Switch 2 cycle approaching, is the other major console player. Neither poses an existential threat PlayStation's 93 million unit installed base, but both limit Sony's ability to raise PlayStation Plus pricing.
On image sensors, Samsung Semiconductor and OmniVision are the closest competitors. Sony's process technology advantage, built over decades at its Kumamoto fabrication facilities, is difficult to replicate quickly. Apple's reported exploration of in-house image sensor development is the long-term risk. Any Apple internalization of iPhone sensors would reduce Sony INSS revenue from its single largest customer by a material amount.
Universal Music Group and Warner Music are the music peers. All three majors benefit from the streaming royalty tailwind. Sony Music's 25% operating income growth in FY 2026 compares favorably to Universal's mid-teens growth. Sony is outgrowing the category leader on a profitability basis, which either reflects catalog mix advantages or execution quality in digital licensing negotiations.
Options activity in Sony ADRs ahead of results showed elevated implied volatility, unusual for a Japanese conglomerate. The The elevated IV reflected uncertainty around how the financial services spin-off accounting would land. Post-announcement, implied volatility collapsed once the non-cash nature of the loss was confirmed and the record operating income was clearly visible.
The 500 billion yen buyback is the primary insider equivalent signal. Japan's corporate governance reforms have pressured large companies to deploy idle capital. Sony's buyback at 3.9% of market cap in a single authorization signals that management views the current ADR price as materially below intrinsic value. For a company that historically returned minimal capital, this represents a clear governance shift.
The ADR structure created a perception gap. The 9-cent ADR EPS versus 14-cent estimate triggered selling among U.S. investors who'd not decomposed the discontinued operations math. Japanese institutional investors who track operating income directly were more constructive, a divergence that may persist until Western analysis correctly attributes the accounting.
Key FY2027 metric. Does operating income reach 1,600 billion yen, approximately $10.67 billion? If Totoki delivers, Sony generates nearly $11 billion annually on an $85 billion market cap. That is a compelling valuation if Bungie and Electronics headwinds are contained.
Bottom line, the net loss is non-cash from the financial services spin-off. Full stop. Sony's operations set an all-time record. Music and image sensors are compounding. The $3.3 billion buyback is real cash. FY 2027 targets another operating income record.
Watch Marathon's launch, image sensor market share versus Samsung, and the FY 2027 operating income path to 1,600 billion yen. At 8 to 9 times forward operating income on a clean entity, do not let accounting noise obscure a record year.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.